back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange, where we just finished talking about crypto, where we've seen records in Bitcoin again. That's coming up in this moment because it's time for the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Don Kaufman, co-founder at TheoTrade. He'll be trading BITO for us. But before that, let's just get a big picture. Some of your thoughts on what's going on here in the market today and going forward.
Yeah, things have kind of mellowed out a little bit following, obviously, the presidential elections, what we're terming some of the Trump trade. Right now, I'm watching some of the semiconductors, which have had actually quite the pullback over here. And now I'm looking at some of the big tech stocks and wondering if they're overdue as well. So to the remainder of the week, though, I expect a lot of volatility. I mean, what have we really done in the S&Ps this week? And the answer is we are massively unchanged. Look for some decent-sized movement as this week progresses.
All right, first up, BITO. I was talking about Tom Lee of Fundstrat, who was actually saying 150,000 for Bitcoin by the end of the year. That's pretty incredible. The run we've already seen in Bitcoin has been sizable. We're seeing new highs today. I'm curious if you're taking the run or if you're playing the other side here. Just in 1 month, it's up 40%, 3 months, 65%.
So ironically, that's exactly what I'm looking at. Too far, too fast. Look for a pullback in the near term, and as such, I'm actually going to take a bearish position inside of BITO, which is an ETF that doesn't necessarily track Bitcoin, but it tracks the Bitcoin futures. Look, the bottom line with Bitcoin and the entire crypto space right now. Look, if there's signs of a bubble, you look no further than something like a coin called Peanut the Squirrel. It's literally a Peanut the Squirrel coin, which this morning has a $1.8 billion market cap associated with it. So when I say too far, too fast, I mean, that's, again, it's evidence of it. And that's not necessarily Bitcoin, but it's the entire crypto space right now. It's on fire. It needs to cool off. The trade is a January 17, again, Jan 17 expiration here in BITO. I'm buying the 20 puts, selling the 15 puts. So it's a $5 wide spread in what's, a $24 underlying. This trade is done for a $1.05 debit.
I mean, pretty amazing. And don't talk about Peanut the Squirrel because it makes me very sad, and he did not have freebies. Let's get to Rick Ducat.
So really interesting chart here, really interesting subject to talk about. Love it or hate it, it's never boring to talk about Bitcoin. So when we look at our chart, though, all the way back here is a really important point. It may not have seemed like much at the time, but there was a gap up at that level. It's our blue line all the way across here around 1605. That's where we bottomed out multiple times after we had a very sharp rally and then a subsequent long slide downward. So we did fill the gap. It took a while. There was a lot of volatility. We wound up pretty much right where we started, around 16. However, this seems to be about where we bottomed out. Notice that we had our volume profile, point of control, the area of heaviest trading at these low levels that we established. We also saw bullish divergence on the RSI, which is a mismatch. Price was making new closing lows. RSI was trending upward. Now we have broken out. We broke above this ceiling on the RSI. You can see repeatedly topping out at 57, broke through it though. Now we're in the overbought area. Now we're approaching some important horizontal levels. So if we were to zoom in a little bit here, we can look at some key areas here. Red line, repeated resistance and support area around 26. That's the next stop here. Another area like that, lining up with a volume node around 2840. To the downside, our green line, a persistent, now it was previously a ceiling, now it's a floor. 21 bucks, lines up with our moving averages and our volume profile point of control. Here's the strikes for Don's trade, this yellow shaded box. That's where this particular trade would be looking for to go past that blue line, ideally for the max profit scenario for that trade.
Okay, so that's the max profit scenario, but you're expecting this pullback here, Don Kaufman. I want to hear the final thoughts.
Yeah, listen, I don't want to come off as anti-Bitcoin by any stretch of the imagination. I'm not anti-crypto. I'm simply saying that we have, at this point, I mean, literally some of the asset classes in here, like, again, Peanut the Squirrel, that is effectively a worthless coin, trading at a $1.8 billion market cap. And what you've got is systematic risk. They start selling that marketplace, it's clearly going to pull down Bitcoin. It's going to pull down Ethereum and most of the crypto market along with it. So right now it's all fluff and no more go. Hence a kind of a shorter duration, if you will, bearish position in BITO.
All right. Next up, we look at the bond ETF. Some of your thoughts there.
All right, so I'm going to explain the bond ETF in terms of, look, I am short-term bullish, kind of long-term bearish in here. And the short-term bullish is actually the way that I'm going to trade it right now. I think bonds are in an incredibly oversold situation. Don't get me wrong. They're probably going to head lower. I actually see the 10-year, the 10-year interest rate clipping through not only 4.5%, but approaching even 5% towards the end of the year. Nevertheless, in the near term, look for a bounce, specifically in the TLT. I'm looking out to the December 20th expiration. I'm going to buy the 91 calls. I'm going to sell the 95 calls. So I'm just putting myself into a $4 wide call spread. This one is done for $1.40 debit. Look for that bounce in the very near term. And again, I'm gonna trade the bounce. I'm probably also going to fade after it does bounce. This is going to be a volatile market for a period of time.
You look and bonds and the long end of the curve has been in focus, of course. Rick?
There's an old saying, everything is worth what its purchaser will pay. I couldn't help but think about that as you were talking about the crypto coins and everything. I mean, TLT, I feel like this is pretty much the opposite of those two things. This is like the opposite kind of asset type here. But, it's been more of a bearish move for sure here. You can see the first thing I notice here, kind of a head and shoulders type pattern has played out here. You can see our neckline was there around, between like 97 and 96. It did play out to the downside. This is a bearish pattern here. But then we had a tricky situation for traders because we had, on one hand, our blue trend line here trending upward here. We broke through that. It did not hold. So the trend has shifted to the downside. But now that we have this downward trend, look here, you can see kind of a megaphone or broadening triangle type pattern where our two boundaries are moving farther apart from each other. They're diverging apart from each other. At the same time, bullish divergence here, which would be, what momentum type traders would be hoping would lead to a bounce here. So the obvious area to watch first, 93. Once again, long-term important level here, consolidation, frequent stopping point for price, lines up with a volume node, very close to our volume profile point of control as well. Momentum still bearish. Today's candle, not very encouraging, but if we were looking for a short-term bounce here, interested in a trade like this yellow shaded area, once again, is kind of the relevant strikes for this trade here. And if we were to move lower, green line, our supportive area, 89.50, -2 standard deviation channel, 88.45, 2 standard deviations below our blue linear regression line. To the upside, our trend line, 21-day EMA, line up around 92.40 or so, volume profile point of control, another tipping point near about 94.
Okay, thank you for that. And last but not least, when we take a look here at Goldman Sachs, I mean, hovering around the highs, financials have been doing particularly well of late. Some of your thoughts on Goldman, Don?
Yeah, one of the first things they'll say is the financials have kind of shocked me a little bit. The financials, I mean, what are we looking at here? So there's going to be some deregulation. We've actually got, though, the Fed lowering rates, and the explosion inside of the financials is nothing less than phenomenal. In Goldman Sachs, let's get really specific here and really granular. In Goldman Sachs, this thing is up 52% year to date. And I am more than happy shorting it at these particular levels. I mean, look, all good squeezes need to come to an end. And I think that's exactly what you're seeing in here. Although, again, Goldman could still have a bit of upside. I'm actually going to take that short right here, right now. I'm going to give myself ample time to do it. I'm going all the way out to the February 21st expiration. Again, the Feb 21s. I'm going to be buying a 565 put. I'm going to sell the 555 put. So it's a $10 wide put spread. 565, 555, that was like what? it exploded up in a week beyond this. So I'm not asking for a huge amount. This trade's done for a $3.10 debit. So it's defined risk. You can make as much as $10, okay, on the spread. Look for a pullback in Goldman. Again, this squeeze, so again, it got to come to an end.
Just too much, too fast, et cetera, in your opinion. Deutsche Bank actually put a 575 target up from 500 and keeps a hold rating, which is, again, to your point, lower than where it is right now. Don, thank you for that. And final thoughts, Rick Ducat?
Don, I'll do you one better than your year-to-date numbers. We're up like 80% from the 52-week low. So certainly a very notable climb. And just general comment. Hard to think of a big long-term case against the big banks and big financial institutions like this. It kind of just keeps grinding upwards. Obvious periods of consolidation match up with our notable volume nodes. You can see here kind of this stair-step type pattern where we have a sharp rally, sideways consolidation, sharp rally, etc. Repeat. Now we're in a very sharp upward phase here. We had a big gap up with our election news and everything else that's happened here. Now to me it looks like it could be a bull pennant type situation where we have big gap up, period of consolidation, triangular boundaries converging toward each other. A bullish trader would be looking for a break above 607, those old highs here. But for right now, momentum looking pretty strong. Tiny bit of bearish divergence as traders maybe feel out these new price levels here, but we remain in the overbought territory. Look as well, you can see these kind of areas of interest, repeated ceiling here, support zone here. So if we were to look in and zoom in a little bit here, we're right near our +1 channel here, +1 standard deviation above our linear regression line, +2 channel would be the upside area to look. So around 599 and 659 or so respectively. Shaded area, Don's strike prices for his trade there. So looking for basically a drop below the low point after our gap up. Then, support zone down here, 527 to 540 or so.
All right. Thank you for that. So, we've seen the behemoth of the financials, but they have run up quickly. Final quick thought, Don. I mean, we're only a few weeks away till the holidays, really.
Oh, you're already thinking about the Santa Claus rally, which, again, at this point, may have already come and gone. Look, this week, okay, we've had no movement. As I said earlier, we're massively unchanged. And the one thing that's a real standout, though, right now is there's been a tremendous amount of options activity. So the option volume has been high. Traders are clearly positioning themselves. I'm just going to tell you, buckle up. We're ready for some volatility once again. Things kind of died down, they quieted down, but you've got the semis actually selling off here. Look for some wild trade just the remainder of this week.
Okay, thank you both so much, Don Kaufman and Rick Ducat. Taking a look here, we looked at Bitcoin, the bond ETF, Goldman Sachs for the big three. Great to see you both. Thank you.